Hey guys, welcome back to Smart Trader. In this particular video, we will be discussing about the various indicators that act like a stop loss. Understanding these indicators can help you protect your investments and limit potential losses. So let's get started. The first one is the moving averages. Moving averages can be used as a dynamic stop loss indicators. Setting your stop losses just below a relevant moving average can help you exit a trade if the price moves against you. This strategy aligns with the trend and prevents you from holding on to a losing positions for too long, also helps to protect your profits. The second one is the parabolic SAR. The parabolic SAR is specifically designed to act as a stop loss indicator. It appears as dots above and below the price chart and trails the price. When the dot switches sides, it signals a potential trend reversal, making it a useful tool for setting trailing stop losses. The next one is the average true range. The ATR measures market volatility and can help you determine the appropriate distance for your stop loss. During periods of high volatility, you might want to set wider stop loss levels to avoid getting stopped out prematurely. The next one is the downchain channels. The downchain channel consists of an upper and lower boundary that represents the highest and lowest prices over a specific period. Using the downchain channels for a stop losses means exiting a trade when the price breaks out of the channel, indicating a potential trend reversal. Then we come to the volatility based indicator, that is the Bollinger Bands. Volatility based indicators like Bollinger Bands can also act as a stop loss guides. When the price moves outside the bands, it suggests an extreme price movement and may signal the need for a stop loss adjustment. And the next one is the support and resistance levels. Identifying support and resistance levels can serve as a stop loss references. Placing your stop loss just below a significant support level can protect your positions in case the price breaks down, and vice versa with resistance levels. And the last one I would say is the price action. Don't forget the power of price actions in determining the stop loss levels. Patterns like double tops, head and shoulders, or trendline breaks can signal potential reversals and guide your stop loss placement. To sum it up, we have various indicators which acts like a stop loss for you to protect your capital. But it is important to pick the right indicator or right stop loss indicator for your trading style or risk potential. Remember that stop losses is a crucial part of risk management, protecting your capital from significant losses. Well, if you found this video informative, please hit that thumbs up and also the subscribe button. Thanks for watching, and we will see you in the next video.